Welcome back to Focus Fridays, the series where we open up the playbook on real estate investing, from foundational concepts to the sophisticated strategies that help investors grow their wealth with confidence. I'm Jared Shum, Head of Investor Relations here at Focus Capital, and today I'm joined by our Director of Asset Management, Andy Kropp. Andy, welcome to the show.
Awesome. Excited to be here.
Andy, we've touched on asset management fees in a prior episode of this podcast, but today I kind of want to go much deeper because I think that these two roles, asset management and property management, are genuinely misunderstood by a lot of investors. I think people hear property management and think that it's the same as asset management, since the asset that you're managing is a property. But I kind of want to open up that door for investors, show them that like where the operational overlaps are and what each kind of role owns. And the rule of thumb that I usually tell people from a high level is if an investment was a business, a property manager would kind of be the day-to-day operations person running those kind of hands-on things, where the asset manager, like yourself, would be the CEO of a company, making the overarching strategic decisions, but a lot of obviously working towards the same goal. So could you kind of break down what a property management company or individual would own on the ground level, what their responsibilities are day in and day out?
Yeah, definitely. And I love that analogy because the property manager and the asset manager are on the same team. They both share the same goal, and it's for the property to be successful to get to the next capital event. What the property management group's responsible for is the leasing, collecting rents. On the OpEx side, they're responsible for some of the more minor operational expenses like negotiating the landscaping, contracts. They'll do some internet. Sometimes that's shared with asset management. And then some of like the marketing expenses they handle. So all of the day-to-day resident retention, resident satisfaction, leasing is what the property manager will do.
Gotcha. So leasing, tenant relations, maintenance and repairs,
yes,
collections. And then I think that one other thing that I kind of wanted to touch on is what type of reporting are property managers or a property management company such firm responsible for, and where do those reports typically go from there? Do they go direct to investors, or they go to someone like you? Where does that land here at Focus Capital?
So here at Focus Capital, it runs through us. So they'll provide a rent roll, they'll provide their own financials, they're reviewed by us, and then typically we'll have feedback that we get back to them, and then we comb them before that gets to our investors. Additionally, we have our own standardized weekly report of the KPIs that we find most impactful that the property management group is filling out, so we can get ahead of potential issues, or we can help problem solve to make sure that our deals hit our business plans.
Gotcha. That makes sense. So all of this is happening at the property level. It's a day-to-day machinery that keeps the asset running. Now let's flip it. So what does an asset manager do, or a director of asset management own that a property management firm or person, an individual, doesn't necessarily own?
Sure. So they have to oversee all of those little items to make sure that those are all leading up to the big picture. The asset manager is ultimately responsible for the next capital event and business plan execution. So while a property manager, they'll be responsible for the occupancy, making sure all of the things that tie for the like quarterly distributions. The asset manager comes in place when it's time to go refi a project, it's time to go sell the project, and making sure we're tracking towards that goal.
Yeah. So a lot of people are familiar with our decks. We kind of talk about CapEx in there. We talk about business plans. So business plan oversight, that's on you. Financial analysis to a point is also on you. CapEx decisions, CapEx or strategic decisions and stuff like that. And then I would say that the from a reporting aspect, you send internal reports to our team, and then we work together on certain parts of our investor reporting. Here at Focus, we send out monthly updates, which are smaller, more concise updates that don't really have a ton of data in it, but more of like, here's what happened in the past 30 days. Here's what we plan on doing in the next 30 days. And I get a lot of that information from you.
Yep.
And then our quarterly reports have like all of those more robust financials, the trends and stuff like that, and some commentary there. And so I think that communicating performance to LPs when it comes to distributions, updates, financials, and the narrative of how the investment is tracking is super important, especially if we need to pivot. And that's something that like an asset manager would have to decide if we need to pivot on the side of a business plan. I think it also, another factor of your job that people may or may not be aware of is that you have to hold the property manager accountable.
Right.
If it's an execution thing, if the reason a business plan is failing is not because the thesis is wrong, but the executioner of that plan or the executor of that plan is not doing kind of the motions that they need to be doing, that's your role to kind of be like,
Definitely.
coach them or cut them.
Yeah. Yeah. And that is a good point there. It is like a coach or cut. I've seen deals that were actually really good deals go poorly because they had the wrong property manager in place. There's a deal that I was involved with in the past. It was located in Miami Gardens. It was an A-class property. We had the wrong property manager in place. We ended up letting her go, put in a new property manager, and we saw our occupancy tick up from low 80s to high 90s within a couple of months at the rents we needed to hit. So it is, the property management piece is such a crucial piece. And if an asset manager can't hold them accountable and can't tell that they have the right or wrong person in place, that can be an issue. So you need that's a key role of asset management, is holding that property management team accountable.
Yeah. With my IR hat on, a lot of investors or potential investors who are listening to this podcast are probably wanting to know how this affects their returns, how this affects kind of their finances, not just the finances of the property. So from a return standpoint, where does property management quality show up in the numbers?
I think it shows up in the numbers in the distributions. So the property management team, they're responsible for keeping the property full, making sure that you're hitting your monthly NOI targets. And if you hit that, then you're probably hitting your preferred return distributions. Where then the asset manager comes in place and is important is they then lead you to the next capital event, which has some of like the larger returns. So, but obviously you can't get to that capital event if the site's not occupied correctly and it's not hitting like the preferred return distributions.
And like you said, like the property manager that you had brought in, like, so she increased leasing velocity. So it's not just meeting rents, but also making sure that obviously you're at the capacity that you want to be at.
Yeah.
That it increases cash flow right there. I think that like collections delinquency is something that you and I have talked about internally. You want to talk about what delinquency is and what a pretty standard percentage is and what a red flag percentage is as far as like what a property delinquency rate?
Sure. So delinquency is basically rent that you billed a tenant that they have not paid. Current delinquency is from 0 days to 30 days. And then if you get past 30 days, then that's delinquency that becomes really concerning. What I'd say a typical percentage that we try to target here at Focus is 0.5% delinquency at every property. And that's pretty standard. It can vary state to state, county to county, as some counties are more difficult to deal with than others. But a general rule of thumb is 0.5%.
Yeah, and to put this in perspective, like we're going to talk about round numbers, so let's round up to like even 1%.
Yeah.
Like a property running at a 5% delinquency versus a 1% delinquency at a 100-unit asset, around round numbers, can mean the difference between, of $50,000 to $80,000 like dollars in lost annual revenue, which is a direct hit to NOI and affects both distributions and exit valuation.
Oh, definitely.
And then I would say that like something that maybe most people aren't aware of, but is turnover cost, or what it costs to turn over a unit, vacancy loss, make ready, leasing fees, all that can run another, $2,000 to $5,000 more, depending on what you're doing. So a property manager who proactively drives renewals and not just lease ups, and manages the retention process can also save money there, which improves cash flow. You had mentioned one thing earlier on what the day-to-day responsibilities are in a manager. Have you seen managers that, how do they manage kind of expense control? Because that can also affect kind of like our property financials. Is that a relationship with external vendors? Is there needing to be that skill of negotiating contracts? Like, where does that skill lie, and how do you kind of assess that when you're assessing property managers?
Definitely. The best property managers have good relationship with key vendors. They're cleaners, the painters for turning the units. And a lot of them will negotiate too. Like if you have, 4 or 5 units that need to be turned at once, you can actually have all of those turned with the same contractor to negotiate that price a little bit lower. They're typically good negotiators with their landscapers. And then also sometimes if there are some CapEx projects that might not hit my desk, I might be the ultimate approver. They'll go and they'll come with 3 bids, and they'll actually use those bids to negotiate the other vendors lower too before it even hits my desk, to where it's a pretty quick approval from my standpoint.
Gotcha. So I kind of want to understand a little bit more about a point that we kind of made off to the side earlier about coaching and cutting.
Mm-hmm.
What does an asset manager do in a harder situation where a deal is underperforming and isn't tracking a business plan? What is kind of your step-by-step process on how to diagnose and then execute or pivot from there?
Yeah. So the first point there is diagnosing what's wrong with the property. And that can sometimes be a lot of different things. So if collections are the issue, it's like, why are collections the issue? Are we not screening correctly on the front end? And we could be screening for different things. Are we not screening criminal well enough? Are we not screening credit well enough? Are we not calling past places where they've lived to confirm if they've paid their rent or not? There's all of that just from just a screening standpoint. And then you could also be looking at, hey, there's some properties that just run too high of an OPEX load. How can you try to lower different OPEX items, whether it be payroll and trying to negotiate if you have similar properties in the area and running one property manager and sharing an assistant community manager between sites. Taxes, you can always look at doing a tax appeal if a deal is underperforming, and that's typically the largest expense, which helps to move the needle. But ultimately, it's, hey, most properties, they might not be performing to the business plan, but they'll be able to cover their debt service if they're, occupied at the right rate. So if you can have a property manager who can keep the place full, then it becomes a lot easier to clean up all the other items.
So if it's a market issue, so if your property manager is performing and it's a market issue, then you just have to recalibrate, pivot, maybe adjust expectations, and then communicate that proactively with investors. Mm-hmm. And it sounds like if it's an execution issue, that is sometimes a little bit more easier because you can kind of address that directly.
Yeah.
Whether it is an on-site issue, whether it's a property management issue. I think that one thing that I would speak to from the strategy perspective is that if it's in the capital management dimension, do we have adequate reserves? Do we need to engage a lender? Are there consequential decisions from that judgment? One thing that I always have to explain to our LPs are, just because we're not distributing the first quarter we acquire a cash flowing asset doesn't mean that it's not cash flowing. Distributions come after reserves. And so it's healthy to keep reserves for a property that's typically either lender required or very highly encouraged. Mm-hmm. Whether our lenders require or not, we here at Focus Capital always have capital reserves. And that's where a property can be performing well, but if you only are measuring a property's performance off of your LP distributions, you might be missing a bigger picture of hey, your asset's appreciating, it's doing well, we are cash flowing, but all of this cash flow right now is going to CapEx reserves. And then also on top of that, we might be hitting an amort period where that payment is going to be different. What should passive investors evaluate on either side of these functions before they invest? So if someone's listening to this podcast and they're evaluating a passive deal, whether it's our deal or somebody else's deal, what should they be looking for in terms of asset management and property management if they aren't familiar with these roles before? And what kind of questions could they ask the person that they're talking to?
Yeah. So, we've kind of talked so far how important having a good property manager is, then also having a good asset manager can get you to the actual business plan capital event. So obviously it's really important. I think just asking the track record of the sponsor, the asset manager, then asking how much experience they have working with the property management group too is also important. Knowing the property management group, have they operated similar properties in that market is a really important question to ask. And then asking, because every property management company has likely had some properties that haven't gone well. So how have they pivoted on deals that haven't gone well? Yeah. That's also a good question to ask the asset manager as well.
Yeah. How people and companies and teams handle adversity is more telling than how they handle success, because I feel like anyone can kind of find success a little bit. Everyone has had at least something that I was like, well, that worked out, and I think, and it's like, but that's not skill. But how you handle adversity, how you pivot, how you come out of that situation definitely is more indicative of kind of those skill levels. I think that also something that I encourage people to ask for are sample investment reports. If they are like, what kind of reporting am I going to get on this property? Even though the investor reports come from my desk and my department, a lot of that is, aggregated from different departments here. And then I guess an obvious question is, do you have a dedicated asset manager, or is it's just, Focus Capital is the operator and you don't have a director of asset management, or you don't have someone sitting in that seat? That's a pretty obvious question.
Definitely.
And then for some of our deals, a deal that we've closed on, Bloomington Collection, we unified 2 different properties and brought them under one property management company. If somebody wanted to ask of like why this one over this one and what their past experiences are, like it definitely speaks to an operator's relationship if it's not already internally integrated from like, completely vertical integration from when it comes to in-house property management. So those would be questions I would also probably add on to there. Speaking of questions and speaking of certain points, I guess my last question for you would be, as an expert in this space, in your role, what is the thing that investors almost never ask about, but they probably should? Like, what is underappreciated as part of this work, or something that would be really important for them to know about their investment, but they don't think of asking this question when they're doing their own due diligence process of a deal?
Yeah. So the one thing I've never heard from an actual investor is, what property management group are you picking and why are you picking them? I hear a lot about, hey, where are the rents projected to go? What are the construction starts in the market? More supply questions, more macroeconomic terms. But it's like, if you can find the right property manager, the deal will likely perform pretty well. So that's something that I think a lot of investors aren't necessarily looking at, is the actual property management company, which is so important. Obviously, everything else is also important, but that's something that I would say is pretty underappreciated. And then just in general too, from like the asset management standpoint, is your asset manager has to be like thinking like a tactical knife, or you have to be a generalist in a lot of different areas. You're not like, for instance, yesterday I was out DD at a site. Today I was, running a portfolio-wide financial analysis on all of our deals. And tomorrow I'm going to meet with 2 vendors to negotiate a lower asphalt price at one of our properties. So you have to have a lot of different skill sets to be able to manage a property correctly and hit the capital that you need to hit.
Yeah, I think the important part to kind of double tap on what you just said is, maybe they're aware of the name of the property management group from decks, from prospectus, but they might not be familiar with that group at all. And then the second part is, why are we partnering with them? There's plenty of property managers out there, plenty of property management firms that have an entire portfolio of properties that they manage. But why them and why this one is definitely a great question to ask. So it sounds like the takeaway here is that most investors evaluate a deal by looking at the property, the numbers, but just as important as those variables is how the deal is going to perform. And my side of our deals is the first 10%, and I would say the asset management is the 90 that people don't see. And at the asset level and at the property level, understanding both roles, I think, is in this scenario just not just interesting context, but it's a useful lens that passive investors should develop, so that they can kind of do their own stress testing on if the business plan is going to work. Because we can make any business plan sound great in theory, but the actual implementation, does the operator, does the property manager, does the asset manager that's running that relationship, do they have the skills needed to be able to actually execute that plan? Andy, thanks for breaking this down with us today. I really appreciate you being here. Is there anything else that you'd like to add? Any little tidbits of information that you'd want our investors to know?
No, nothing I can think of, but really appreciate you having me on today, Jared.
Yeah, thanks so much again. Thanks for listening to this week's episode of Focus Fridays. We release a new episode every week, so be sure to join us next Friday and beyond. If you'd like to see our next investment opportunity before it goes public, you can join our investor list by filling out the form on our website, focusedcapital.com. If you have any inquiries about what we've covered on our podcast, general real estate investing questions, or suggestions for the show, we'd love to hear from you. Feel free to reach out to us anytime by emailing us at investors@focusedcapital.com. Take care, and we'll see you next week.